Hey there, it's Brian Bogner and Greg Towner with Parallel Financial, and it is time for our monthly market viewpoint where we tell you a little bit about what we're thinking and how we view the world and what's going on right now in the markets and economy and all those good things. So let's go ahead and get started here for the month of March. As you know, the Fed met yesterday, decided to raise rates a little bit here, so we've got that going on. Also, a lot of talk right now what's going on in the government. Healthcare plan being talked about, potential tax plan, potential infrastructure plan. It's all factoring into this here. But the good news is stock price trends are still strong, both January and February, confirming coming out of the bulk of earnings seasons there. Earnings and sales continue to improve with companies, so that's still a positive. Economic data is also healthy, and we're seeing a lot of good things there. And dividends, and particularly dividend growth, is going to be important. We've got a chart here on that we'll talk about. So let me go ahead and turn it over to Greg. Greg, take it away.
Okay, great. Thanks, Brian. Well, we did want to start out with the overall view of the U.S. markets. We really believe they continue to be in a nice positive uptrend. You can see they're trading above both their 50-day and 200-day moving averages. Some would argue maybe a little bit overbought, far away from its moving average, but sometimes that's the strength of a strong market that doesn't give you a pullback and an opportunity to get in if you're underinvested. So right now, price trends are healthy. Now, if you were with us last month, you may recall we showed a study that looked at how the market does the remainder of the year after January is positive. Well, now we have a new study because February was also positive. So this looks at what happens historically when the market is up in both January and February. What does it do the rest of the year? Well, it's happened 25 times, and it turns out in 23 of those times, the market was positive March through December, averaged about 12%. You can see these blue bars are how much it was up or down every year. And really, 1987 was the only real bad one. That, of course, was the infamous Black Monday. That the gray dots below each bar is how much the market pulled back during the year. So there's, almost always going to be some sort of pullback. But in general, it was a positive sign when the market was up in the beginning of the year. Now, that study is interesting, but really what we want to look at is how are companies doing, how is the economy doing, and so forth. And we've shown a similar chart to this recently. We wanted to show an update now that just about all of the fourth quarter earnings are behind us. For a while there, we had earnings that were kind of flat to down, and now we've got S&P 500 operating earnings, year-over-year growth, projecting nicely higher. So we're getting good inflection point in earnings from companies, and that's important because admittedly the market is a little bit above average as far as valuation is concerned. So we want to see earnings grow into that. But it's not just earnings. Importantly, we're also seeing inflection higher in revenue and sales. So this is a very long-term chart that looks at year-over-year quarterly sales increases, and we're seeing a nice little move higher here, which historically has also been a good indicator that things are positive for equities. Of course, there can always be pullbacks. We like to see companies not only generating positive earnings but positive sales growth as well. So we've talked a lot about the economy and how we've had a good economic data for the last at least 6 months or so. It's been improving. We've really seen a surge higher recently. Now, last month we showed the ISM manufacturing overall survey number. And this month we're showing how it's done for their new orders. So looking forward, again, you can see here really strong, strongest we've had in a while. So manufacturing side, the survey seems to be coming in well, both currently as well as looking forward. And what we really found interesting was actually some of the comments. These are coming from actual companies out of the 300 or so that are surveyed as part of the ISM manufacturing survey. They had comments about very positive this quarter, increasing demand continues to be solid. We're having our bookings are heavy, demand outstripping capacity. So a lot of positive comments across the board from a variety of different industries. So we're really happy to see that as we look out in the economic land. Now, one of the things we'll wrap up with here, we thought this was an interesting chart. We've heard a lot about over the last few years the popularity of dividends and dividend funds and dividend stocks and so forth. And a lot of people just assume that was because of the low interest rate environment, and that's certainly a big factor of it. But really, if we look out demographically, longer term, we think there's actually a bigger reason for this. And we're right at the point now where, of course, the baby boomers are really starting to become a bigger part of the U.S. population. We can see for the next couple decades or so, it's going to increase. And the average age of population over 65 is going to remain at a high level for the foreseeable future. So we think that's going to be another reason that dividends and dividend stocks, and particularly those that grow their dividends, are going to continue to be important. Some think that maybe they will underperform if rates go up, and that may be the case. But for most people, they're more interested in bringing in income, reducing volatility, being able to keep up with inflation. That's much more important to them than how they do quarter to quarter against some benchmark. So we think dividends have a long ways to run. They're maybe not for everybody's strategy and for everybody's personal portfolio, but we think for a lot of people that they are. Well, just in sum, price trends are strong. First couple months of the year are confirming that for us. Earnings and sales continue to be healthy. Economic data continues to be healthy. And we think dividends and dividend growth will remain a key feature in investing for us. Brian?
So thanks again for listening to this. And as always, if you have any questions, give us a call, shoot us an email. We'll be happy to talk with you. So Brian and Greg signing off, and we'll talk again next month.